So hello and welcome back to our YouTube channel everyone, and here is another educational video. And in this video we are going to learn about an indicator. This indicator is going to be helpful for you in your day trading as well as your short term, any kind of short term trading or your swing trading. It's usually best for the swing trading. Okay, so we will be analyzing stocks using this indicator, and I'll be telling you the different strategies that can be used by this indicators to go long and short on the stocks for swing trades or for the intraday trades. So the name of this indicator is stochastic. So this is a momentum oscillators. It tells us the overbought and oversold zone, and the main advantage of this indicator is that this indicator is a leading indicator. Okay, so leading indicators usually responses to the prices quickly, so it will tell you in advance that whether you should go long or you should go short on this particular stock. It will tell you in advance. It will tell you earlier than any other indicator or any other strategy. So with that you can decide upon your trading style. But the thing is that whichever indicator gives you early signals, that indicator will be providing you more signals, but with the more signal comes the more risk, because there will be chances of wispos means false signals. So what you have to do is that you have to be very cautious while using these kind of momentum oscillators. Either you can use them for the confirmation, or if you are using them singularly, like using just this indicator, then remember one thing: have stop losses of say 1%, 2%, and strictly follow those stop losses, because there is no strategy or no indicator in this world which can be right 100 out of 100 times. There will be a percentage probability. Suppose for this indicator it is 80%, so it is quite a good indicator, because it is giving us 80% chances of wins. So that's why this will be considered as a good indicator. But you have to remember one thing is that keep stop losses always when you are trading. In a trader's life, the most important thing is stop loss. It is more important than targets. So please do have stop losses while you are trading. So now we will be starting with the indicator. So first of all, go to the indicators section and we'll be searching stochastic. It is free for use for everyone on the tradingview.com. Stochastic, you can say it is jumped up at the first only. So we'll be selecting it. So here is our stochastic indicator now applied to our chart. So you can see there is a panel made. So this indicator oscillates between 0 and 100, and we have two panels of 20 and 80, and we have two different lines. So one line is percentage K line and second line is percentage D line. So percentage K line's moving average is percentage D line. Okay, so what does this mean? That percentage D will be our fast moving average. If we were to talk in the language of the moving average, then the percentage D line is going to be our fast moving average, and percentage K is going to be our slow moving averages. So with this we are going to generate three types of different signals, or we are going to generate signals in three different forms. Okay, so let's see how to do that. Okay, so once the indicator is fixed, first of all, always do one thing: go to the settings and check whether the settings are correct or not. So K is at 14, D is at 3. So perfect. Okay, we want this only. We will be going to the styles. So blue line is percentage K and the orange line is percentage D. So okay, this is the slow moving, this is the fast moving. Do remember that your upper band should be 80 and your lower band should be 20. So do check this before start trading or before start taking calls based upon this. Okay, so now we are all clear. So now there are going to be three different forms through which we are going to generate our calls for the going long and going short. So above 80 is overbought zone. Overbought zones, what does that signifies? It signifies that now market is overbought. There is a lot of people who have bought the particular stocks, and now this is the time that prices will fall. And here you can see the prices, the stochastic have went above the 80 line, which means the prices were in the overbought zone. You can see here it has made a high the prices have made a high on the daily chart, and after that what has happened, you can see the prices has fallen. So it is as simple as that. Just by looking at, and look at here, it has given you the overbought zone right at the top. Here you can see, after this particular candle, when the stochastic has made its high above the 80 zone, you can see after that the prices has started falling. So you can see this indicator, I have told you this is a leading indicator. It will indicate you in advance that whether prices are going to rise or prices are going to fall, and with that comes the risk of false signals. But here you can see the accuracy. Again, I'll show you one more times more. So here again you can see, once again the prices were above the 80 zone, means in the overbought zone. Here the stochastic made its high, its peak somewhere here, and you can see prices have started falling after that. So this is how you have to take signals, and this is how you can short or go long in the market. This is the one way. I'll show you from the bottom side also. So here you can see the prices was below the stochastic was below the 20, mean in the oversold zone, and then you can see a surge in the prices. So because of these charts, so let me show you how much gain did we had. After this is 1286 to 1306, so it is a gain of almost 20 points. So this is a swing trading strategy which has worked out good for us. Again, here you can see that the prices are in the overbought zone. Here you can see, and similarly you can go and short the market. So here you can see one thing, that prices have stayed, stochastic have stayed above the 80 for a longer period of time, but after that prices have fallen, but market was in the overbought zone. That's why I've told you this indicator is best used for the swing trading. And trading generally lasts for what I say is 14 days. So for the span of 14 days it is good. And one more thing I would like to say you, that this indicator or any kind of strategy work differently in every stock. So you also have to do some study. I'm telling you the basics of this indicator, I'm telling you the basic of how to use this indicator. Then what you have to do is you have to do your own study. Like in this particular Infosys stocks, we can see that whenever there are shorting opportunities, this indicator is helping us out tremendously, but for the long opportunities it is not helping us out that much. This is the first kind of strategy that can be used based upon the stochastic, and what we have found that shorting opportunities, this indicator is giving us best calls, but long opportunities not that effective. So what you have to do is you have to go to the other stocks and similarly apply this indicator and check whether this indicator is giving good long calls or good short calls. In the Infosys it is giving good short calls. So what we are going to do, we are going to use this indicator in the Infosys stock for finding the shorting opportunities only. Okay, so this is how, this is just a common sense, and I'm telling you always do back testing based upon the knowledge that we share with you. Like this, in this Infosys stock I have done the back testing, and with that confidence I'm telling you this stochastic will give you tremendous call for the shorting. In the Infosys this stochastic will give you, but long calls you have to go to other stocks and will have to find. Now condition, this is the condition number one, the strategy number one. This is how it works in the Infosys. Now I am going to talk about the strategy number two based upon the stochastic, and the strategy number two is crossover between percentage K and percentage D line. So we know that percentage K is fast moving, so whenever it goes above the percentage D line, that's the time we are going to buy the stock. Okay, so here somewhere we can see this is the convergence, and this is the exact point where we can see percentage K, this blue line has gone above the percentage D line, and here you can see prices have also risen nicely. Again here also you can see percentage K line has gone above the percentage D line and prices have risen goodly. So this is how it is moving, and it is giving us good signals. And here in the again here also we can see the best example is here, when here we can see the prices have not bottomed out, the stochastic have not bottomed out, that have not gone below the 20, but we have seen a crossover between the percentage K and percentage D, and then we have seen a good surge in the prices of the Infosys. So this is how this crossover works. So now what we have seen, one thing which is very nicely demonstrated by crossover is that this crossover works good for finding the long opportunities in the Infosys stock. Again, I'm telling you, first we have seen the strategy number one based upon the stochastic, which was overbought and oversold zones. So what we have found out, that in the Infosys stock, particularly in the Infosys stock I'm talking about, that the overbought zones are clearly demonstrated by the percentage, stochastic. Then the strategy number two, the crossover, the long opportunities are given goodly by the stochastic indicator. So this is for the Infosys stock. For other stocks, you have to go and you have to study whichever stock you are trading, because this indicator is really good for the swing trading and how easily it can be used. You have seen this. So this is the problem. I'm telling you the 80% accuracy I have told you in general, but if you do your back testing and if you do your study, you will find out that the accuracy of this indicator is more than 80%. Okay, but you have to find out that this indicator, okay, this indicator gives us three kind of different strategies. So which strategy is working goodly in which particular stock, and whether that strategy is giving us only buy calls or only sell calls. Okay, in Reliance stock, this stochastic indicator gives us only buy calls, then only used for buying in Reliance. That's indicator. The strategy number one is giving buy calls. For example, Infosys I have took. So on the overbought and oversold zone, when we are talking about, then stochastic is giving us good overbought zones in the Infosys, means shorting opportunities. Second is crossover thing. So crossover thing, it is giving us good long calls. When percentage K is going above percentage D, then it is giving good long calls. So use that strategy for going long in the Infosys only. Don't look shorting opportunity based upon that strategy in the Infosys stock. So you have to be very clear, you have to be very specific, you have to do your study, make your notes and do study. So this is how you can do. And the third is simple one, is the divergence. Divergence means when the prices are making high and the stochastic is making low. The stochastic is making low and the prices are making high, which means that there is a divergence between the prices. Prices are saying that we are going to rise, but the stochastic is in the oversold zone. Think about it. When prices are at high, means that the stochastic should be at the overbought zone, but contractually stochastic is in the oversold zone. So what does that mean? That buying is weak, the market for the stock is weak. So what you have to do, you have to follow the stochastic. So these are the three different strategies that can be used based upon the stochastic. So now do your own research, listen to the video again if you have not understood anything, and then do your own research, apply this strategy on different stock and find out which strategy works best in which stocks, and then trade accordingly. So that's my advice to all of you. So with this, I'll end the video. So thank you so much for watching this video, everyone. Please do like this video, share this video with your friends and family, and dear, please do not forget to subscribe our channel. That's really important. Thank you so much.